I think you get back to maybe 25, maybe 28. But please understand that my next target on the downside is 12,000 to 13,000. And I don't mean to scare anyone. This is just what the charts are telling me. It's my job to just tell you guys what the charts are saying. We talked about, and I talked about Bitcoin heading down to 20,000. The main reason I thought it needed to get there is because that was the 2017 high. We've been seeing a lot of the dot-com-ish type stuff. For those of you that don't remember the dot-coms, it was basically crypto, but for the internet, right? The internet age was just dawning in the late 90s. Stocks were going up, from 5 cents to 20 cents to $1 to $5, just like a lot of cryptocurrencies did. And Amazon, by the way, was one of those stocks that just had an amazing move up. But just like with crypto now, the dot-com bubble collapsed, and a lot of dot-coms got wiped out. They went to zero, and a lot of them also were bought out for pennies on the dollar by the likes of the bigger players out there. So the same thing is going on here in crypto, and that's one of the calls that I made going back to last November, is that we have to see that flush out. Part of that reasoning is just simply, if you look at how many cryptocurrencies there are like 20,000. There's no way that we can have 20,000 cryptocurrencies. It probably should be 50 or maybe just 20. So you have to flush those out. We've seen other cryptocurrencies like Terra Luna basically collapse. So it's in the process. The one thing I would say is, if you look at this chart, you should get a technical bounce here. Now, this is the important part here. So I am calling for a technical bounce back to probably this level here. Let me put a trend line in. So this is about 25,500. And then if that's able to be eclipsed, you have upside to about 28,000, maybe 300 to 400. However, I don't believe we are at the lows on crypto. So I think this is a trader's market in crypto. I think you get back to maybe 25, maybe 28, but please understand that my next target on the downside is 12,000 to 13,000. And I don't mean to scare anyone. This is just what the charts are telling me. It's my job to just tell you guys what the charts are saying. So I'm a big believer in it. I think that once it bottoms out, it will have a run. Now, one thing I'd love to show you guys, let me show you guys this on the chart. I might have shown you guys this in the past, but if we look at the Bitcoin chart here, now notice this big M pattern right here, right?
Oh yeah.
So we have this pattern here. And then what I want to show you guys is look at the Amazon chart going back. Let's go to the weekly so we can get back there, going back to the dot-com era. All right. So if we zoom in, and I hope I'm not making anyone sick moving the chart, but look at the same sort of pattern here on Amazon. And I really do look at Bitcoin like the Amazon of cryptocurrency, meaning that, Amazon's reached $1 trillion+. It's a mega sized company. It's taking over the globe. And you got the same sort of pattern here. And so this, yes, it collapsed. It went from all the way, if we look at the highs up here, let me go to the daily chart. So if we look here, let me just say this. So here you got as high as, this is post-split. So it was, remember, Amazon just split recently. So, pre-split, it was about $112 and it collapsed all the way down to $6. So if you think about cryptocurrency and Bitcoin, it could mean that Bitcoin not only is headed to 12,000, but lower. But my bigger point is look at that in relation to where Amazon went. Right. Wow. So now see that little M pattern back there?
Yep.
Right over here.
Yep.
And then look at where it went. So I really do believe that cryptocurrency, as it matures as an asset, will eventually start behaving much like Amazon. And that means there is massive, massive upside. You just have to weather the storm. We have to get through this kind of bubble bursting, and then the best will survive. So I think as a short-term play, you are going to see some sort of rally here, because if you can see here, basically this thing had a nonstop run, and then it kind of basically put in a little bit of a short-term top. And if we draw a trend line across these highs, the low that we recently saw was right to that. So I think in the near term, it likely gets a bounce back. I could see 120, 125 or so on the price. But I do think we're in a new era where valuation matters. There were so many years where valuation did not matter for technology stocks, and now people want to see that value. And so the PE ratios for a lot of these companies have to come in. So my guess is, yes, a bounce here, but I wouldn't stay married to it for too long unless you're okay holding it for a really longer period in case it goes a little bit lower. Because I do think eventually it probably does head down just a little bit more. But if you look at the gold chart, a lot of people are like, oh, gold stinks. It hasn't even moved all year. You know, we're basically hovering at the same level we were at the start of the year, which was right over here, right? So, I mean, maybe we're up 1% or 2% on gold, but this is only one small portion of the deal here. Number one, Bitcoin's down over 50% since the start of the year, maybe even more. Number two, the equity markets, you know, the S&P's down over 20%, NASDAQ is down over 30%. So now you're in an asset where it's been holding steady. And not only that, but usually in a market where the dollar soars, gold gets smoked, but gold has been rocking here. Take a look at the DXY, the move from the beginning of the year. Here's the beginning of the year, and look at the dollar. The fact that gold is still even flat to positive when the dollar has soared is hugely bullish, right? And then the other side of the coin, and you know this too, Carrie, is that when yields start to go up, usually usually gold also gets pounded. And look at yields since the start of the year. We're basically up over 100% on yields, and gold has still held strong. So again, it's not flashy, it's not sexy, but gold has been rocking it this year. And what it tells me is that when the dollar finally starts to decline, or when yields continue to pull back, you could see a major move up in gold. Yeah, so this chart right here and these parallel lines, at least for me until proven otherwise, is everything, right? So we can clearly see that you started, this is going back to 2015, then you had this high in 2016, you missed it a little bit here in 2020, and now you're hitting this line. And notice the parallel line is almost perfectly touching here and then touches here and here. So what I like to do is when I look at charts, I say, okay, anything can happen. You're going to hear people saying, oh, the dollar is going to go to zero. You're going to hear people saying, oh, the dollar is going to continue to rip higher. It's the only game in town. I'm more in the middle ground where I say, well, let the chart tell me. Let the chart tell me. And what I see right here is that every time we come up here in the past, we're kind of getting a pullback, you know, here, 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 and here. And that tells me that the probabilities of a move is for a down move. So I'm actually bearish on the dollar here in the near term. Over the next couple of months, I think the dollar could pull back. Let's say the dollar wasn't up huge this year. I think gold could be $100, $200 higher, right? I think if yields weren't soaring this year, same thing. So you have to put it in those perspectives. And then the basics of it is that, you know, gold has held your value this year if you were in it versus the S&P or Bitcoin. So I still will tell you, I mean, here's your trend line. You broke out right here. You went to double top. That's a classic double top with this high in 2020. We then had a pullback to the scene of the crime. We kind of kissed it again, but gold is still holding this golden trend line, if you will, that tells me it's still in a breakout, even though it hasn't soared yet. I would just say, look for the signals, look for the dollar to start to come in. Things like that could be the catalyst to the bigger move up in gold that should start sooner than later. Yeah, I mean, I think any sort of, you know, geopolitical, I mean, if the war, hopefully not, but if it were to spread, people would absolutely run into that. They'd also run into the dollar though, frankly. So again, then you'd have that battle of dollar up and then gold, can gold also move up? So it's tricky, right? I mean, you know, you have to look at it in those terms, but I think instability and fear are reasons why people buy gold. And I think that fear factor of what's the Federal Reserve going to do? Is the economy going to go into recession? Are they going to start printing again? Or is it reset? You know, this is why gold to me makes so much sense, is because if the Fed is printing, then you have inflation. If they're tightening, then you have recession, and the fear of a recession makes people buy gold. So it's kind of like both sides to me make sense with gold. So again, it should be one of those things where it's almost like you sleep a lot better at night having some gold in your portfolio.
It's just like a little bit of
longer term chart. I still am bullish on for sure. You have the big move up here. This is all sideways consolidation on a bigger time frame. But there's no denying that right now we've had a little bit of a short-term breakdown on silver, and your next target is around $19. So my guess is we do test 19, and a lot of people are saying, you know, why is gold holding up but silver's kind of coming down? And the essence of that is basically the industrial side, right? So silver has that side of it where it's used in batteries, it's used in solar panels. So if the economy is moving towards recession, then it makes sense that there could be a weakening in silver, even if some people are buying it as a store of safety. Now, longer term, you know, and this is the big thing too, right? Is longer term, is it dead? No. And the bottom line is we're moving towards an economy where there's more alternate energy like solar, more electric cars. So I mean, shorter term, yes, recessions come and go, but I think again, the switchover has started, and the 19 level is a huge buying opportunity. I'll be eyeing that one to buy some. Yeah, let's talk about lithium here. So this is LAC, which is a Lithium Americas Corp. But I mean, the bottom line is that in recessions, you're going to see these things pull back. Like we've seen copper have a big pullback, all of these kind of industrial silver. We just talked about silver. So you have to understand that. And the biggest signals, by the way, was the hype, right? I mean, there was so much hype around lithium and because of the Elon Musk story and Tesla and electric cars. But you always want to remember to sell into that hype. When it gets to that level where you walk into your local pizza place or sandwich shop and they're talking about it, always remember that's your signal. You should get nervous if you're long these type of things. And then the bottom line is let it come down. It may still have a big macro move to the upside down the line, but they just have to correct. It has to flush out what we call the weak hands. So like on LAC here, I would start getting really interested right around this $16, $17 level here. Lots of support in here. You get back to this 2021 area. And in fact, there's also a trend line I'm seeing right here where this is actually why we're holding this level. Now, I don't think this level holds for too much longer, but look at that beautiful trend line right there with price just above it. So you're still actually holding support here, but I would say that, with the economy maybe inching towards recession, it wouldn't shock me to see a little bit more downside.